Every decade has a window, a short, quiet moment when the world reshuffles wealth. Most people miss it because it doesn't come with fireworks or headlines. But the smart money, they're already moving. 2026 isn't about luck. It's about positioning. Because right now, we're standing at the edge of the next big wealth transfer, and you don't want to be watching from the sidelines. Here's something few people realize. Wealth doesn't vanish during crises. It simply changes hands. Every major economic shakeup, the dot-com crash, the housing bubble, the pandemic, created new millionaires and bankrupted others. The difference wasn't timing or IQ. It was awareness. And that's exactly what's happening again. Look around, the world feels uncertain. Inflation's cooling, but prices aren't dropping. Tech stocks are soaring, yet layoffs keep coming. Real estate's expensive, but homes aren't selling. Everyone feels something's off, and they're right. It's not chaos, it's transition. Smart investors call this the wealth window, a short period when old systems are cracking and new opportunities are quietly forming underneath. The last one happened between 2009 and 2012, after the Great Recession. While the masses were scared, the smart money was buying. Tech founders, crypto pioneers, and real estate investors built fortunes in those exact years. Now the same signs are flashing again. Only this time, the stakes are higher. We're not just facing a financial reset. We're seeing an energy shift, a demographic wave, and a technology revolution colliding at once. That combination doesn't happen often, maybe once every generation. And 2026 is shaping up to be the turning point. Why 2026? Because it's when multiple economic cycles align. The global debt cycle, the innovation cycle, and the demographic spending cycle all intersect. Baby boomers retire en masse. Governments face record deficits. AI reshapes entire industries faster than regulations can catch up. If you're paying attention, this isn't bad news. It's the signal that the game board is being reset. And just like in chess, the players who see 3 moves ahead, not 3 seconds, are the ones who win. That's why smart investors aren't panicking. They're observing, they're reallocating, they're moving their capital away from inflated bubbles and into what comes next. Assets built on scarcity, utility, and real value. The truth is, wealth never disappears. It only changes pockets. And 2026 might be the biggest handoff of our lifetime. Let's talk about what smart money really means. It's not a secret club or an elite handshake. It's simply people who understand the psychology of cycles. They know that humans swing between 2 extremes, greed and fear, and that wealth is built quietly in between. Right now, smart investors aren't chasing hype. They're positioning for what's next. Here's what they see. 1. The age of easy money is ending. From 2010 to 2021, money was practically free. Interest rates were near zero. Debt was cheap. That fueled bubbles in everything: stocks, housing, crypto, even collectibles. But now that tide is pulling back. Borrowing is expensive. Governments are trapped in debt. To buy anything, and it goes up. Era is gone. That's not bad. It's healthy. It means we're returning to value-based investing. Assets that produce real cash flow, solve real problems, or store real value will thrive. 2. AI and automation are creating both chaos and opportunity. Entire industries are being disrupted: media, design, education, coding. But behind every disruption is an efficiency boom. The smart money is betting on companies that use AI to make profits, not just talk about it. Think logistics, cybersecurity, energy management, sectors that AI supercharges quietly while everyone else chases headlines. 3. The global trust reset is real. People are losing faith in governments, banks, and even traditional currencies. That's why gold, Bitcoin, and real assets are surging. They're not investments anymore, they're exits from a system people no longer trust. 4. Demographics are destiny. As boomers retire, they're selling assets and shifting into income stability, bonds, dividends, annuities. That creates openings for younger investors to buy real estate, small businesses, and stocks at better valuations. Smart money isn't fighting that trend. It's flowing with it. In short, they're not looking at headlines. They're studying behavior, where confidence is moving, where fear is growing, and where value quietly hides. Because the smartest investors don't predict the future, they position for probabilities. If you want to understand where wealth moves next, follow three forces: capital, technology, and psychology. These always move together, like currents under the surface of an ocean. Capital is where the money flows. Technology decides how fast it moves. And psychology determines whether it's moving because of fear or optimism. In 2026, these three are colliding in powerful ways. Let's start with capital. Global money is rotating out of overvalued markets and into tangible assets. Institutional funds are quietly increasing exposure to commodities, infrastructure, and emerging markets. They're not gambling, they're hedging. Retail investors, meanwhile, are pulling money out of stocks and parking it in high-yield savings, afraid of volatility. That's how smart money gets the upper hand, by doing the opposite of fear. Next, technology. Every major wealth window in history has followed a technological leap. The Industrial Revolution, the internet, mobile, now AI. But the biggest mistake people make is chasing products instead of infrastructure. The internet made billionaires not from websites, but from the systems that powered them: cloud computing, logistics, chips. AI will do the same. The winners won't be the apps. They'll be the builders, data centers, semiconductors, power grids, and cybersecurity firms. That's where the next generation of long-term wealth will grow quietly, while everyone else debates which chatbot sounds smarter. And finally, psychology. This is where most people lose. Because when uncertainty rises, our brains crave safety, not opportunity. But history rewards those who act when others freeze. During the 2020 pandemic crash, those who invested in tech and commodities doubled or tripled their wealth in just a few years. Not because they predicted perfectly, but because they stayed rational when fear ruled the room. 2026 will test that again. There will be noise, political tension, election fears, economic warnings. The crowd will panic. The patient will accumulate. That's how wealth windows work. They open when fear blinds everyone else. So, what's the map? It's not a secret formula. It's simply follow where trust is rebuilding, where technology solves real pain points, and where value is ignored because it's not trending yet. That's where smart money goes first. The old rules of wealth were simple: get a degree, get a job, buy a house, invest in stocks, and retire comfortably. Those rules worked when stability was predictable. But now, the world runs on volatility. So here are the new rules the smart money is quietly following. Rule 1. Diversify by logic, not by habit. Don't spread your money across everything. Spread it across things that make sense. A mix of real assets, like gold or real estate, growth exposure, like tech and AI, and defensive cash flow, like dividend stocks or businesses that earn even in recessions. Rule 2. Stop timing, start preparing. No one can perfectly call the bottom or top. The smart money doesn't try to. They build systems, automatic investments, recurring savings, side income streams, so they can buy steadily, no matter the noise. Rule 3. Own skills, not just assets. In every wealth reset, the people who adapt fastest win. Learn digital leverage, AI tools, automation, coding, storytelling, negotiation. These are assets that never deflate. Rule 4. Follow the flow of trust. Money follows confidence. Watch where governments, corporations, and consumers feel safest parking value. When trust moves from fiat to commodities, or from banks to blockchain, that's your early signal. Rule 5. Think long-term, act short-term. Have a 10-year vision, but make 30-day moves. Adjust, pivot, but don't lose the bigger picture. The wealth window isn't a one-week event. It's a multi-year opportunity for those who can keep patience while others chase hype. These aren't tips, they're mindsets. Because in every transition, mindset beats mechanics. And here's the truth the wealthy understand. Wealth isn't built in booms, it's accumulated in winters. The trick is to treat fear as a compass, not a wall. The biggest mistake people make during a wealth shift isn't missing the opportunity, it's misunderstanding themselves. Money moves fast, but emotion moves faster. When you see headlines about AI millionaires or the next crash, your brain jumps between FOMO and fear like a ping pong ball. That's why most people buy high and sell low. Smart money isn't immune to emotion, they just design systems that keep emotion out. Automatic investing, clear exit rules, patience. That's what keeps them calm while everyone else panics. There's another layer to this: identity. People cling to the way they've always made money. The real estate investor trusts property. The trader trusts charts. The tech founder trusts innovation. But when cycles shift, the winners are the ones who adapt their identity faster than the market changes. The 2026 wealth window will reward adaptability, not just financial agility, psychological flexibility. The ability to say, maybe what worked for me 5 years ago won't work now. That humility is rare, but it's priceless. Because in markets, arrogance is expensive. Curiosity is profitable. So ask yourself, what's one thing the world is undervaluing today? What's one skill, one trend, one sector everyone's ignoring because it's boring or too early? That's your clue. Smart investors aren't fortune tellers. They're behavioral scientists with patience. They observe, they wait, they act when probabilities stack in their favor. By 2026, the biggest opportunities may not even look exciting. They might look slow, quiet, even dull. Infrastructure, AI logistics, renewable energy, financial education, or cybersecurity. But boring is beautiful when it compounds. That's where true wealth hides, not in chaos, but in consistency. The 2026 wealth window isn't about predicting the next boom. It's about preparing for the next balance. History doesn't reward panic or perfection. It rewards patience and positioning. So, look deeper than the noise. The smart money already is. Because while most are busy chasing certainty, the wealthy are busy creating it. Stay sharp, stay humble, and stay ahead.